Markets took a hit today, but metals surged. You're watching the Stock Market Summary series, and we're going to get into the markets, what happened, touch on some standout stocks and sectors in the economy, and we'll wrap up with crypto and metals. A quick word, though, before we get into it. Just remember that none of this is buying or selling advice, seriously. So don't go making any trading decisions based on what we mention here, okay? Yeah. Just take it as it's intended to be. Trading education. So with that said, and out of the way, let's get into it. It was certainly, well, a challenging day for equities across the board.
It really was. What we saw today was a NASDAQ, the QQQ ETF. It kind of led the decline, down about 1.16%.
Yeah.
And crucially, it dipped back below its 20-day moving average. That's that short-term trend indicator we mentioned keeping an eye on just yesterday.
Right.
When price falls below that, well, it often signals a loss of that bullish momentum, So now QQQ seems to be carving out a range. Looks like between maybe $559 and $584. And with that rising 50-day moving average coming up towards it, you can really see that classic tug of war playing out between the buyers and sellers. It's something to watch.
And the broader market wasn't spared either, right? The S&P 500, the SPY, slipped about, 0.6%?
0.6.
The Dow, DIA, held a bit steadier, only down 0.15%, while the Russell 2000, the IWM, dipped 0.44%. So yeah, a broad retreat, but definitely some pockets holding up better than others.
That divergence is key. And if we connect this to the bigger picture, the S&P 500's movement today, it's kind of hinting at a rising wedge pattern.
Okay, a rising wedge.
Yeah, so for those who track charts, drawing your trend lines here is really important because this pattern, with those converging upward sloping lines, often suggests that while the market is still climbing, the upward push might be, exhausting itself. Recognizing these kinds of structures gives us a heads up on what might come next.
Okay, let's unpack this with a standout stock, because amidst all that weakness, Baidu, BIDU, just popped. A remarkable 4.76%.
Yeah.
That's a huge outlier today. What was driving that kind of strength?
Well, that's where it gets really fascinating, actually.
Yeah.
This move for BIDU was essentially like the release of all that pent-up energy from its really long consolidation. It's precisely what we're anticipating yesterday.
Wow, okay.
It just beautifully illustrates how that sustained sideways price action often acts like a coiled spring, right? And the eventual breakout, especially when the general market is weak, it signals a really powerful shift in sentiment, a strong commitment from the buyers here.
Right.
It's a prime example of understanding market psychology. Price finally picks a direction, volume spikes as one side gives up and the other side holds strong. This kind of pattern recognition and understanding the psychology behind it, that's a core part of what we teach in the Grok Trade Mentorship program.
Speaking of patterns then, we saw some of the semiconductor giants like NVIDIA and Taiwan Semi taking a bit of a dip today. Is that a warning sign, or is something else brewing there?
That's a good question. Their next moves are definitely something to watch. The main semiconductor ETFs, SMH and SOXX, they're actually coiling tighter.
Coiling tighter?
Yeah, meaning their price action is consolidating into a really narrow range.
Yeah. And
volatility is dropping. Think of it like compressing a spring. It's building potential energy. This often indicates they're setting up for a potential breakout. Could be up or down, probably over the next few weeks.
Gotcha.
We got the core PCE price index. That's a key inflation gauge the Fed watches month over month for July. It came in at plus 0.3%. Now, that matched the prior month, but it actually topped the consensus forecast, which was plus 0.2%. So it signals, persistent inflationary pressures.
Still sticky.
Exactly. Then we had personal income and personal spending, both month over month, also at plus 0.3%. But both of those came in a little below what was expected. So, yeah, it's a bit of a mixed bag of data, definitely keeping traders on edge about the economy's direction.
Makes sense. Okay, before we shift gears to crypto and metals, just a quick note to everyone listening. As always, guys, if you've got a stock you're watching or maybe a question about the markets, drop it in the comments. We might cover it in an upcoming summary video. And also, hey, if you're enjoying these summary videos, do us a solid and hit that like button for us. We really appreciate it. All right, moving on from traditional equities, let's turn our attention to crypto and metals. Bitcoin seemed to struggle today.
It certainly did. Bitcoin, BTC, dropped about 4% to around 108K. It's still, struggling to find a clear floor.
Yeah.
Just like we noted yesterday. The bears are clearly still in control for now. It just highlights how crucial it is to respect the trend, especially when it's clearly pointing downwards.
But then, in stark contrast, metals just surged.
Yes. This is where the real action was today, absolutely. Gold, GLD, surged almost a full percent, 0.96%. And it really looks like it might finally be breaking out of that long-awaited weekly bull flag pattern we've been tracking all week.
That bull flag, right.
Yeah, classic bullish continuation pattern.
Huh.
Suggests more upside could be coming after that strong rally. And silver, SLV, wasn't far behind, jumping 1.89%.
Wow.
It looks like it's confirming a breakout from its own consolidation, kind of a symmetrical triangle pattern. Price converges, then boom, breaks out, hopefully with momentum.
So what's key now for these metal moves?
What's crucial now is watching for momentum and volume to sustain these moves. You need confirmation. This is a really key aspect of risk management and pattern confirmation, knowing when a breakout is real versus just a head fake. And, these are exactly the kinds of techniques taught in depth in our mentorship program. Honestly, days like today, with QQQ carving out that range, BIDU unleashing that textbook breakout, and gold and silver potentially confirming these pattern breaks, this is exactly where our Grok Trade mentorship truly shines.
How so?
Well, the coaching really hones your ability to spot these setups in real time, manage your risk with precision, and trade confidently. Plus, you get continuous support until you actually recoup your investment. It's really an ideal way to tackle everything from SMH's potential coil breakout to GLD's confirmed move today.
Well, that's it for our summary today. Days like this really show how quickly things can shift, and knowing how to read those signals and manage your risk is, well, it's absolutely everything.
Couldn't agree more.
We'll see you next week, everyone, and have a great, great long weekend. We'll catch you next Tuesday because Monday is Labor Day and the stock markets will be closed, but we'll catch you Tuesday to see how all these things play out.